Look at these people, horrible, horrible people, property investors trying to make more money, being like,
okay, what does your income look like? What are your goals? Are you planning to buy 10 of these? Are you planning to buy 5 of these? You want, can your income support further growth in your portfolio?
it's always better if you can get more income on that same investment than otherwise.
Harder to find, definitely harder to find. You don't get blocks of units in good regional, or metro locations for that matter easily.
How do you make money in property? That's what we're going to go through. That sounded like a super fun topic. We're going to talk about how to manufacture more income when you buy properties. Adi, you're a whiz at this. I got this topic idea just talking to you about all these weird ass investments that you're buying for people that are liar, where it's just like, man, I'm making a lot of income. I've got an 8% yield here, got a 7% yield there. I'm just like, I got to talk to you about this, man. This is so cool. For everyone listening, when you purchase a property investment, it's always better if you can get more income on that same investment than otherwise. There are ways to manufacture that. And that's exactly what we're going to go through in this episode. We're going to go through things that are beyond just buying in regional areas with high yields. We're going to talk through buying blocks of units. We're going to talk through potentially buying apartments and townhouses with higher yields and low strata costs. We're going to talk about granny flats and duplexes and other types of dual income type properties. We're going to talk about the quick flip. We're going to be talking about the quick little cosmetic reno as well as that option. And then we're going to talk about the regional areas that offer potentially higher yields just as a fundamental level for the level of risk you take and the higher yields you get. This is a powerful way to supplement your property portfolio, get more income, make it easier to hold, help you continue to purchase, especially if you're buying companies and trusts. It's really, really important for property investors. It's the age-old growth versus cash flow debate.
I love it.
What do you think?
I'm excited about this topic, man.
You're a whiz at this.
Thank you. I appreciate it. This sort of goes back to my client strategy, right? A lot of my early on discussions with them. Okay, what does your income look like? What are your goals? Are you planning to buy 10 of these? Are you planning to buy 5 of these? You want, can your income support further growth in your portfolio?
Yep.
So a lot of those decisions dictate what their yield strategy will look like. So as soon as someone comes along to me, I'm like, I want to buy in a trust and I want to do this. I want to build a portfolio. My thinking hat goes on. I'm like, a 3% yield is not going to work for you, because you want to grow aggressively. We need to try something different. So one of my favorite ones, blocks of units. So I started.
Love that.
It's funny. Yep. I started with a block of unit.
I love that story.
That was my second property.
That was wild. Yeah.
Griffith, right? I sort of look at it now, 9 years later. That property is worth like, I don't know, 4 times what I paid for it.
So good.
But it's like, I don't even know what the yield is anymore.
Life-changing one, right?
Man, it's absolutely life-changing. Yeah, that's right. That was my little,
I like it.
Right? And it was, I don't even know what, cute. I mean, that's the only one. Imagine in a 6.5% interest rate environment, it's a principal and interest as well, completely positively geared. Pays me every single month, right?
Love it.
Again, that wasn't today. I mean, that wasn't from day one. It happened over time. I did renovations, the rents went up organically, then the market sort of, did its thing as well. I love blocks of units. I've actually just secured a block of units for clients of mine. They're buying in a trust. Their income wasn't great. They needed some kind of income support to go into it.
Brilliant.
And we've executed on purchase. I think we're looking at a 6.6% yield, which is
so good,
absolutely amazing, right? So not quite positively geared, but it's a hell of a lot better than the 3.5% with a 10% deposit.
Double. What a great plan there. Couple reasons why it's so good as well. Blocks of units can be a great strategy to couple capital growth and cash flow because you can often purchase a block of units below its actual combined value. Correct. Where you buy 3 for the price of 2.7 or 2.5 and you make that extra amount there on buying. And sometimes they're even subdivided. It's just like, I just don't want to sell it individually. I want to sell it as a group to one person, make it easy, make it quick for me.
Yep.
You can buy cheap like this. So there's that. You get the capital growth of buying in below actual value. When you buy blocks of units, you can make that happen. Or you can manufacture equity. This is quite common in Sydney, very common in Sydney's eastern suburbs. You see it everywhere where people buy a block of apartments. They do what they need to. They fireproof the walls and they get the water meters in and whatever else that they need to do, the subdivision works done to then carve up the units into individual pieces and they make a capital gain through that process. And they also manufacture an increase in the yield. From a lending strategy perspective, depending on the number of units, you can get residential finance for this in many cases as well, with a lot of different lenders.
Yeah.
So, once you start getting to 5, 6, 7, 8, 9, 10 units, you're starting to get into that.
Commercial 30% deposit kind of vibe, right?
Yeah, but commercial lending is nothing to fear as well.
Yes.
You can still get lending quite comfortably on this sort of stuff. Banks do like it, but on blocks of 3 or 4, you're talking about the country's biggest banks. Love
right.
that stuff. They don't
That's
mind.
right.
So you can still get easy access to finance, 70, 80% loans. That's more than okay. It's a really, really great investing strategy to manufacture yield and get capital growth.
I think so too. And I think
Easy to find. How hard is it to find?
it's harder to find. And that's sort of like that's my feedback to the clients, right? If we want to tick these boxes in terms of your investment strategy, you want capital growth, you want the yield component as well. What I love about this particular deal that I talked about, it's actually comes subdivided. It's actually 3 different literal properties that are being sold to us in one big
What a
heap.
whiz.
And man, these
How
guys
hard
can
was it to find?
I have a lot of contacts in this market, so that has helped, right? These are contacts that I've built up over the last 3-4 months. I'm good with people, so I talk to a lot of people all day long. I'm on phone calls.
You are good at talking, Adi.
Thank you. Not very good at listening. What did you say? Thank you.
You have to be to sit
sorry.
here.
We're about hour 4 of our podcast, so we're starting to.
We're Joe Roganing it today.
That's right,
yeah.
We're redlining at this point.
Yes.
So I get a lot of phone calls out of the blue, but
Yes,
hey, I have
course.
this I actually got one today. Same thing. A block of 2 units. Do you have any clients to sort of meet this criteria? So this one was one of those. Came to me sort of through an off-market connection that I have. I did my due diligence and I was like, man, this is insane. This sort of ticks every box. That's another thing. You can't tick. It's very hard to tick every single box that you're looking for. This one does.
Unique, yeah.
And this one is subdivided. Subdivisions themselves, I think, Red, you were saying, like they cost a lot of money going through the council.
Yes.
It's a 6-month process. It's a whole thing. But these guys can go and effectively sell off one of the units if they want to, make bank or whatever they want to do, and pay off the loan. A lot of the loan of the other one. I love this strategy. It's one of my favorites. Harder to find. Definitely harder to find. You don't get blocks of units in good regional, or metro locations for that matter easily. But if you're patient and you don't have any sort of, I need to buy in the next week, I love that. Then we can do it, right?
Yeah,
we can definitely do it. One of my personal favorites, doing renos, man. It's a huge
number
one.
2 strategy here.
Number 2 strategy. I love it.
This one's brilliant, and it goes back into the how we did a podcast a little while ago about where would I buy, what opportunities would I buy. This is the opportunity. If I am a young investor, I'm starting out and I'm not capital rich. I haven't got 100 grand. I haven't got bank of mum and dad. I'm just saving my way and building my way up. This is what I'm doing because I want to buy in the market as quickly as I can, but I need enough of a deposit to go and do so. I love this strategy. Let's run through it.
I love it, man. So I, like my partner and I recently settled on a property, regional Victoria.
You don't stop, Adi, do you?
I know. We just keep buying, man.
Yeah. Addicted to this stuff, man.
I love it, man.
Yeah.
If I'm,
Need
and
some
that's the other
therapy?
thing, right? It
Need some
is kind of
therapy?
like, kind of is, right?
Got a shopping addiction for property.
For property, that's right. For me, it's like if I'm going to be coming to you and saying, "Hey, property investment is the vehicle that sort of changes lives, leverage, all of that stuff."
Yep.
I want to put my money where my mouth is, right? So I want to show you my investments. I'm happy to share the locations where I'm buying, the addresses if you need it. I love that stuff, right? Because it gives you confidence that I'm not just some guy who's never bought a property in his life telling me to buy property.
Yep.
You go buy property. I have, right? And these are the results. So my partner and I recently settled on a unit.
Yes.
It's our first unit. We've never bought a unit before. We've only bought houses before or blocks of units.
Yep.
This was a unit in a,
right?
It's an amazing yield, right?
Yes.
We bought it
What was
really under market value. The original yield that was going to come back wasn't going to be anything terrible. It was like, I think it was like sort of low 7s or something, relative to the purchase price. But we were like, you know what? No, we bought this really under market value because we can see similar units that have been updated going for a lot more than what we bought it for.
Yep.
So we were like, you know what? Before we get tenants in, let's just do a bit of a reno. So we're putting, new carpets in. The paint, I think, actually finishes today, which is quite exciting. New carpets will go in tomorrow. We changing some of the cupboards and stuff in the kitchen, all the visual stuff, stuff that people are like, oh, that's pretty. Getting a new oven in there, new blinds, just low ticket stuff that makes a lot of impact from a visual perspective.
Yeah, for a tenant, that means everything.
It means anything, exactly. And I think we've added like $60-$70 to the rent now.
That's so good.
Which is amazing, right? But the cool thing is we've done this. We're going to get the tenant in. We're going to get a revaluation done again.
I love this.
I'm going to go back. I'm going to go back to the bank. I'm like, hey,
all
man,
your money back.
I've put in a lot of money into this. This property
Give it
looks
back to
nothing.
me.
Exactly. I've put in a lot of the
Here's
money.
my money.
Exactly. Give it back to me so I can put it in the offset account. What the heck? You know, so that's the plan. So we will go back once our reno is finished in the next couple of weeks, go back to the bank, be like, hey, this property is very different to the one we bought 2 weeks ago.
Yes.
It's completely different. It's actually more like this property than this property next to it. Give us our money back. We'll refinance at 80% and boom, there's your deposit. The original deposit that we paid will most likely come back, or at least a part of it. Put it in the offset account. It's money for nothing, man. It's just sort of like the money that I put in, I get right back.
Genius. That's a great strategy. And did you touch on the purchase price? This is like 200 grand or something.
It was like 232 grand, man.
230,000. So you could probably find, let's just do the math here. You can probably get in with 20 odd thousand. If you're just, I love dealing with young people in our business where it's just like you're a 19-year-old boy that's like, I work at the service station, I work at the KFC, I've saved up 20 grand, my mum and dad have added in 3,000, it's the best thing in the world, I'm going to buy my first property. I'm like, you are going to do well in life. You are. My friend, because you are young and you're doing some crazy stuff
you're
like
hungry.
that. You're hungry.
Also, if that's you, contact me. I might have a job for you.
Yes, that's genius, yes. So that approach can really get you in because you don't need that much money, and you could probably credit card your way with this, and then equity, like this is really wild. And exactly what I'd do if I go back, turn the clock 15 years as to how would I start today. I would be doing this. I'd be buying one or two of these, whatever my capital position allowed. You could probably get a loan for it because it's such a small loan. Doing this as quickly as I can. If I didn't have the money, I would credit card my way, being like, banks, can I have a credit card, please? This is absolutely wild. Not credit advice, by the way, not credit advice, general advice only. I need to do that. But I would be doing some version of this because it gets me on the ladder and I'm pretty confident I'm going to make my money. Can you, to help everyone, can you name me 2 spots in Victoria where this sort of approach could work?
I love Mildura.
Mildura,
regional Victoria. I absolutely love the economy there, love the people there. I was actually there a couple of weeks ago.
We'll do a podcast on Mildura soon.
Absolutely, we should, man. I absolutely love it over there.
Anything in Melbourne? Ish? That spits to mind, one of the cheaper areas. It's got apartments, maybe. Probably have.
Footscray. It's probably got some good value there.
Old apartments there?
Some older apartments.
Perfect.
You know, Eldridge Street, where I used to live, I saw my old apartment come up on realestate.com the other day. So I was like, ooh,
emotional buy.
Yeah, I know.
Emotional buy.
Like, it's not bad. It's kind of going, I think it was going for like 350, I want to say, or 340 or something. And it was if it looks anything like when I lived in it, would definitely use it with a bit of paint and new carport.
That's the sort of opportunity at
That's exactly right, man. Exactly right. Cool. There's definitely some opportunities out there. So
right, let's run into the next option here. So we've talked about apartments in general with this option. We've talked about renos of apartments.
Blocks of units.
We've talked about blocks of units, which I really like. And these, there's 2 more to talk about. So this one's probably more of a Sydney one where you're talking about granny flats and dual income properties. Do you find that common in Melbourne? Granny flats and dual income properties?
If it wasn't common, I'm about to make it. So one of my properties in Mildura, it's an 850 square meter block. We've got a nice 3-bedroom house on it. So one of our next projects in the next 12 to 18 months is to build a granny flat because our yield on this property is already like 5.5%, 6%.
It's going to be like 10.
Yeah, I was like, that's not enough for me. I want more money from other people. So we're going to put a granny flat there, whatever that looks like, 120K. I'm not sure what that accent was, by the way. But
love that.
I think it's Count Chocula or something.
Some YouTube comments are like, I'm going to clip this and send it to news.com.au and be like, look at these people, horrible, horrible people, property investors trying to make more money, being like, you're probably on the wrong channel. Like just a heads up, if you're not interested in property, and you're not interested in...
Sounds like they are, just for a different reason than
probably not here for the right reasons because that's who we're talking to. But yes, I can sense a little bit of hate coming because of that being like, I want more money. They're like, oh, Adi, that's a dangerous thing to say for our YouTube world.
It is, man, it is. But
I like it. It's blatantly honest and that's so true. It's why we're here.
Right.
We're here to help educate you on how to make money, really, and how to help you achieve what you want, and property as the vehicle and the source for that.
That's exactly right. So granny flat is definitely an option. I think it's, I feel like it's a great option. Again, depends on the council and what they'll approve, what kind of zoning it is and all that kind of stuff. It all plays a role, right? But places with low yield, if you're going in with a low yield property, right? It sometimes happens, 3.5%, 4%. Yes, you can wait for your rents to go up, or you can go and get a little construction loan, put up a little granny flat at the back, add another $300 to your rent, and suddenly your yield doesn't look so crappy. So we're actually employing this strategy in the next couple of years, and I'm kind of excited to see what that pans out. How that sort of looks for us from a overall cash flow perspective.
Yes.
So yeah,
that's pretty cool, man. You're doing some cool stuff, Adi.
Thank you, man. I
That's
appreciate
very cool. We got one more to talk about, which you've already touched on. We're talking about regional and smaller markets.
Yes.
You talked about Mildura.
Yes.
I looked at a map and I'm like, where is Mildura? And I'm like, it's far away. Like it's kind of Adelaide, Melbourne, Sydney. It's like midpoint kind of, not quite, but like, it's far away from everything.
Yep.
And when you buy far away from everything into smaller markets, you actually get greater yields. You're not getting 8% for an apartment in Melbourne.
Yes.
Like you probably just can't find that anywhere. But you can in regional markets. So if you want to manufacture yield, you can look at regional markets and look at different opportunities, dual incomes, different types of properties. You can mix it all in together. You can buy a block of apartments in a regional area. That's apartments because it's a block of apartments. And you can do a little, and you can do a little reno. Oh, you can turbocharge all of this by getting all of that in one. I feel like I've just made your life really, really difficult.
Oh, no. Because all my job opportunities are gone.
No, there's that. And then every single one of your client profile briefs is going to be like, I want a block of apartments that I can renovate.
That's right.
That has a double-digit yield. you're like,
damn it.
So, yeah, you got to bear the truth in mind. Like these sort of opportunities are unicorns. You're not going to find them very often. And, you could be waiting a year to find this sort of opportunity. So it is balancing the realities of that as well and actually making a decision. Like you don't want to wait a year and watch a market go in front of you. You want to make a decision, and you could potentially buy multiple apartments if you needed to make what you want happen.
I agree. And on the point of being a unicorn, to be honest, we weren't even in the market for a property when we bought the unit that we were talking about.
Oh, really?
Yeah. An agent called me to say, hey, we have, again, one of those contacts that I was telling you about. An agent called me to say, hey, we have this unit that the finance has fallen through with this other buyer. Do you have anyone? And I called up my partner. I was like, Rona, do you want to buy a unit? And she was like, huh? And then I was like, that's a yes then. And
you didn't say no.
Yeah, that's right. The next thing you know, I put in an offer and it was done. So
love that.
It's not common. It's definitely not common, right? I don't know anyone else who's sort of pulled this off, at least in the markets I'm talking about. But if you're in the market, you're sort of, this is where, and this is a whole other podcast in itself. Your finances already, you're just tapped into what is happening with your finances. You're talking to, Flint Invest, you've got your pre-approvals, at least you're having those discussions, you're just ready.
Yep.
Opportunities pop up, man.
Yeah, I agree with that.
Opportunities come to those that, make it happen. So
exactly. Yeah. I love that attitude. Adi, you're a ball of wisdom here as well, with all of those insights about a lot of the deals that you've made, executing this for yourself and employing pretty much all of these strategies: apartments, regional location, blocks of apartments, cosmetic renos to make it all happen. You've done it all and seen it all, and these are great, great opportunities. If you're a young investor, this is an opportunity for you. If you're an advanced investor, this is an opportunity for you. And if you're a middle ground investor, this is an opportunity for you. Different mix of these. This was a great, great episode about getting yield and getting more money from your property investments to help you on your journey towards whatever you're trying to create and effectively help you get to where you want to get to. Getting more income is always going to help.